Hi guys, welcome back to my channel. Kelvin here. Recently, the market has been going back up. S&P 500 has gone up by 15% from its bottom. Nasdaq 20%. Even my Tesla has gone up by 37% and burning all the Tesla shorts along the way. So now, the question that's on everyone's mind, where is the market going to go from here? To the moon? Obviously. But is it to this moon or to this moon? So in this video, I want to share why has the market gone up by so much? Is the worst already over? Or is there a stock market crash coming soon? Maybe. But before I start, I would greatly appreciate it if you can help to tap the like button and subscribe if you haven't done so. In return, I will show you a bat eating a banana. Alright, let's start right now. Okay, let's first understand, why did the entire market rocket up over these past few weeks? Is it a bug? Just kidding, there are a few reasons why this happened. The first reason is because inflation is slowing down. Just last week, inflation came in at 8.5%, beating estimates which predicted that inflation could be higher. And that's obviously good news, right? Because prior to that, inflation has been going up and up. And now, it seems like inflation may have already peaked and may be coming down soon. If you look at the inflation breakdown, even though food prices are still going up, the other biggest contributor to this whole inflation, energy prices, have started to come down. So that's good. On top of that, all items except for food and energy, like cars, apparel, shelter and services, have also started to come down. So all in all, this is good news. That's why the market gave a big fat green candle when this news came out. And that leads me to my next reason. Commodity prices going down. Inflation is largely affected by commodity prices. Since the beginning of this year, commodity prices have been going up. So, thank you Putin. Earlier this year, oil went from $60+ all the way to over $120, then slowly coming back down to $90+. At the same time, the DB Agriculture Fund, which tracks the price of agriculture stuff like soybeans, corn, wheat, live cattle, sugar and so on, have also came down from the peak. So that's the reason why inflation has been coming down. If it can remain at this level or go down even more, then we can expect inflation to continue going down. Prior to this, because inflation has been going up and up, the Fed has been super aggressive in raising interest rates. They first started by raising 25 basis points, then inflation went up. Then they increased to 50 basis point hike. Then inflation went up some more. So Papa Powell mentioned that he's strongly committed to fight inflation and tells everyone to be ready. He'd be like, apes, fortify your minds, and starts raising interest rates by 75 basis points for a few times. At one point in time, it was thought that the Fed would even raise interest rates by 100 basis points, which is super high. But now, if inflation has already peaked, that means the Fed won't have to be so aggressive anymore. Check this out. Right now, we are at 225 to 250 basis points, and the next Fed meeting will be on 21st September. Currently, there's a 65% chance that the next rate hike will be just 50 basis points, which is good. If that comes out true, it's likely that the market will rocket up even more. Fourth, we just missed a potential recession. Yes, the GDP did decline for 2 consecutive quarters, which technically counts as a recession already. But it didn't came with all the scary recession stuff. Right now, unemployment rate is still low. Job openings is still high. Wage growth went up. Consumer spending is still going strong. In short, even though there's 2 consecutive negative GDPs, the economy still be like, ooh la la, party mode. Which again, caused the market to go up even more. Quick pause. Weibo is the latest stockbroker in Singapore. With Weibo, you can now buy US stocks, US options and Hong Kong stocks for a low fee of $0. Yes, that's right. It's zero commission trading. Weibo also supports fractional shares. So you can now buy stocks with just your $100 Angbao money. But the most important question is, what's their sign up gift? If you sign up now, deposit at least $1,965, make 6 buy trades on either US stocks, ETFs or options, you will get $100 worth of free Google shares. This promotion ends on 1st September, yeah? So if you are interested, you can sign up with my link down below. With that being said, let's get back to the video. Fifth, when inflation and interest rates shot up, all of us were expecting company earnings to drop, which they did. Like Apple reported lower profit, Netflix lost subscribers, Google profit dropped. But here's something you need to know about the stock market. It doesn't care whether earnings go up or go down. Instead, it looks at whether the earnings beat or miss estimates. Like Netflix stock shot up because it beat expectations. Tesla earnings dropped, the stock still went up because it beat expectations. According to this report, about 78% of the companies beat expectations for Q2 2022. So even though earnings have dropped, they didn't drop as bad as we thought. So when you add up all these reasons, that's why the market has been going up and up, which leads us to this big question. Will it continue going up, or is it just another fake rally? Let me show you something interesting from a Seeking Alpha article. The author showed that this bear market is very similar to the past few bear markets. This is in 1937. We were to follow a similar pattern, the market would rally upwards, then crash down super hard. Same in 2000, where it turned out to be a fake rally. Similarly, it happened in 2008, where the market went up first, then crashed back down. So, crash coming soon? Of course not, yet. The market would only crash if there's any more bad news popping up. Like, Nancy Pelosi decides to visit Taiwan again just for fun. So, here are a few things that can cause the market to crash back down. First, recession. Historically, whenever the yield curve inverts, a recession will happen in the next 6 to 24 months. This chart is the 10-year minus 2-year bond yields. If it goes below 0, that means the yield curve inverted. So here, it goes below 0, recession, below 0, recession, below 0, recession, and so on. And right now, not only has it gone below 0, it has kept going down and down with no signs of stopping. So even though everything may still look good now, a recession could still happen. The former president of New York Fed mentioned that he believes a recession will be coming in the next 12 months. This could very well happen because many companies like Apple, Google, Facebook are slowing down hiring to prepare themselves for a slower economy. Meanwhile, consumer sentiments are still low, which means that consumers are still not confident about the current economy. Because of that, they will start to cut back on spending. Like right now, some restaurants are reporting weaker sales already. And if you look at something called the Purchasing Manager Index, it has been going down too, which signals that the economy may weaken soon. So with all these indicators, chances are we could still see a recession happening soon. And when that happens, the market will come back down. Next, even though inflation has gone down by a bit, the truth is inflation is still high. And it's not uncommon to see inflation going down, only to see it coming back up again. It happens all the time. Now, oil has already came down from its peak, but it seems like it's starting to come back up again. As a famous man once said, winter is coming. Many countries rely on heating oil to keep warm, which means that during winter months in October to March, we will see demand for oil go up, which can cause oil price to go up too. At the same time, commodity prices have been falling, but since the end of July, they have started coming back up again. Oh yeah, let's not forget about China. Currently, China is still closing its borders due to its zero-COVID policy. But if one day China suddenly reopens its borders, everyone will start traveling again, and you will see inflation going to the moon. When that happens, Papa Power will turn around and say, high interest rate ah! Finally, black swan events. Black swan events are hard to predict, but whenever they happen, they can crash the market. Here are a few examples of what could happen. Maybe the Russia-Ukraine war escalates, or maybe China decides to invade Taiwan, or maybe there's another new pandemic. You never know, huh? Personally, I don't think the bear market is over yet, because the stuff that caused this whole crash in the first place is still around. Like inflation is still high, commodity prices may still go up, interest rate is still going up, company earnings is not expected to go back up yet, economy is still weakening, and so on. That's my noob predictions here. I can be totally wrong about this. But as usual, I'm bad at timing the market. So I'll just DCA in as usual. Market up, I buy. Market down, I cry a bit, then I buy more. But over the long term, I'll be alright because stonks. Anyway, that's all for today. Hopefully, this video helps you out. Like, share, and subscribe as I'll be posting new videos every Monday, Wednesday, and Friday.